Hello, everyone, and welcome to another edition of the SEANC View podcast. This is Jonathan Owens, joined by Artis Watkins, and today we have another recurring guest. The State Treasurer, Brad Briner, was nice enough to join us this week for a few hard-hitting questions, and we also appreciate you giving us a room to do the interview in, because we are still homeless, from what we said last week.
We are, and we do appreciate it. But hey, we also appreciate the fact that everybody wants to talk to you right now, and you're talking to the state employees.
I told him before we started that, this is probably a little more pressure than the CNBC interview that he just did, but we're gonna get through it. So.
Well, welcome to the palatial treasurer's office. I think it is true that we have the lowest lease rate of all the agencies in government here, and we're proud of that.
Really?
$21 a foot.
Yeah, we're right across the way there and through the woods, and I've always thought this is a really nice area here.
So this building is owned by a company we invest in, right?
It is. I don't think so. Trinity Properties is the owner of this building. I don't think we invest with them.
Okay, at one time somebody who owned it, but that's probably been a long time.
It could be. No, we just extended the lease for 4 more years. Nice. We looked at moving downtown. It was more than double the price. And I couldn't figure out why that was good value for taxpayer money. So here we are, and it works just fine, as you see.
It's a great building.
Well, we're happy to have you in the neighborhood. First hard-hitting question for you. We have to bring this up because of the time that we're in. Tell us about the Hurricanes and how we could have owned the Hurricanes.
It would be fascinating, I'm sure, to be an owner of a sports franchise.
Yeah.
I think there's some that are publicly traded, so you can go do that yourself if you want. They have appreciated in value unbelievably. It's not a surprise in the world we live in, where everything's available at all time on your device, that the value of in-person experiences goes up.
Sure.
Yeah.
And so it is with sports, but that's reflected in the valuations of the franchises. So Tom Dundon is a fantastic guy and a great entrepreneur. He bought the Hurricanes some years ago for, I think, $450 million. And as he was thinking about buying the Portland Trail Blazers, he was going to raise some money by selling some of his Hurricane stake. Mm-hmm. The problem to our mind was that the valuation was $2.6 billion. So almost 6 times what he paid. And it is more valuable than what he paid. It is a good business, but we couldn't figure out why that was good value. And so we don't get to consider whether it would be cool. We get to consider whether it's going to make all the state employees and the retirees money. That's our job. So we passed on that.
Yeah, we appreciate that.
We do. John pointed out it would be weird anyway for state employees to own something they can't afford tickets to.
Well, nobody can afford them right now.
Yeah, well, right now,
That's true,
but it is we think it's wonderful that the Hurricanes are doing as well as they're doing. We are recording this on Thursday. Is it the 11th of June?
11th, yes.
So
they play tonight.
Yeah, they play tonight and hopefully advance even for, they keep advancing.
Yes. So the first question that I have, we saw a report out, I guess it was a week or two ago, that the pension fund is now at a record $148.3 billion. It's important to get that 0.3 in there. And it's gained $25 billion since you took office.
It has.
Congrats.
Thank you.
To that.
Congrats to all of us. It's everybody who's listening to this money. So it's for all of us to enjoy. And we've had a tailwind. No mistake about that. The stock market has gone up a reasonable amount since it took office. But a lot of the changes that we've made have helped too. With you guys' support and the General Assembly support. We're doing this in a way that I think is responsible and still conservative, but it gets the gains we need so that we can do the things we all want to do with the people's money.
So along those same lines, retirees will see that number and they'll say, well, where is our COLA? Yeah. How do you answer that question?
Sure. So I've gotten that question a lot, and it's a high quality problem to have to answer that question at the immediate moment. You get really quickly into actuarial and pension math. When you cut through all that, we've got 93 or 94 cents on the dollar today of what we owe to our retirees now and in the future. And the question becomes, how close to 100 do you want to get before you start adding to what you're paying people? We had a policy in place that essentially said the number had to be 100. Mm-hmm. We changed that policy. So the way that it will work from here, and we'll start these conversations in January of next year for the following fiscal year, is that we've got to have gains that allow us to pay if we're below 100 cents. Yeah. Now, you'd think that gains meant like recent, we smooth it over 5 years.
Right.
Uh-huh.
So we had a tough 2022. Interest rates went up a lot. So bond prices went down. Stock market went down. And so we got hit on both sides of our portfolio. And we're still recovering from that because it's in the 5-year number. Once we get out of the 5-year number, we'll be in really good shape.
I hate the 5-year smoothing so much, like with a perfect passion, because as long as I've been doing this, which is, since Methuselah, it has been an issue because at some point in a 5-year period, there's usually a little lull. And we've been told every time, well, it's the 5-year smoothing. That's what's holding us back.
I hear you. And it is interesting to think about that statement because, it is roughly every 5 years, it seems. But the trick and the goal is to make the other 4 so good that we can deal with that 5th.
Fair.
Not to hope the 5th goes away.
Right.
And so that's what, 2025 was a great year. 2026 is off to a good start. I think we're evolving the portfolio in really interesting ways that are not the most traditional ways. We're buying things like Anthropic. We announced that last week. This is a late stage artificial intelligence company that is not a typical thing for a pension to buy. But if you've used artificial intelligence, you know the power of that company. That stake is up 150% since we bought it 12 weeks ago. And so we're doing things like that. We're buying an office building in Raleigh that's fully leased, that doesn't even have any debt on it. It's pretty boring, but it makes us 9%. So hopefully we won't have this. The stock market is all that matters, and the ups and downs we have to live and die by. Going forward, we'll have a portfolio that'll just consistently deliver. So we'll get out of the worry about 5-year smoothing.
We still have a bunch of timber. That was another one of my pet peeves.
Unfortunately, we do.
Oh, my goodness.
We have been embarked on a project for a year to try to solve that problem. We've had that timber for 20 years.
I hate the timber.
We have made, I think, almost no money on it.
Can we make guitars, like custom-made guitars, and then make a lot of money?
I think it's essentially for pulp and paper use.
Oh, my goodness.
So I don't think you'd want that guitar.
So we need another toilet paper run like in COVID.
It would help.
Yeah.
Okay, I'm lost. Is this an actual plot of timber, or is it growing now?
We own 1 million acres of
growing timber
all over the country.
Wow.
It's a REIT, right?
We own it in 2 different entities, and it's over $1 billion. And we've been trying to move on from it for some time.
Okay.
I'm hopeful that we can get that done. As people think about the term opportunity cost,
right?
That is the biggest opportunity cost you could conceive of for this pension. We put in $1 billion, we'll take out $1 billion. If we put in anything else, it'd be at least 2, maybe 3.
Oh my goodness!
Yeah. A money market would have got you 1%, right?
More.
Yeah.
Right. Stock market would have quadrupled or quintupled over that time. Pick your favorite asset that's not timber, and it would have been better.
Well, I have to say, one of my favorite things that I've seen come out of this office recently, and I liked a lot of the things that have come out of this office, but you did a video about the really good performance of the plan. And you said, what kind of things can we do with that? Well, we can do a COLA for the members, and we could maybe bring down the cost to the taxpayers through what the General Assembly puts in. The order of those things was very important. Oftentimes we just hear, oh, good, the legislature can put less in. So it always feels to state employees and retirees like it doesn't matter how much we make in profit, it never somehow makes it to us. So I think that was I don't know if that was an intentional thing on your part, but it was a powerful message.
Well, thank you. I'm a firm believer if we do our job right, we can have both.
Gotcha.
And at 17.49% in teachers right now, that's a big number. But I also know another big number, and that's 43%. And that's the cumulative inflation since we did a permanent COLA.
Mm-hmm.
That's a bigger problem.
It's huge, yeah.
But both are problems.
Yeah.
Yeah, and, we have retirees who definitely were working, or some of them were retired during the days when the state put in 0 or 0.23 of 1%. They've never forgotten that. So we were screaming at the time, don't do this because eventually you'll have to put a ton in. And here we are. So again, it's really nice to see somebody recognize that
Yeah.
This isn't just because retirees are just somehow crazy expensive. It's because we didn't take care of our plan appropriately. This ad hoc approach can get some really interesting results where you might ignore it one year.
Right.
And you might have to really overfund it the next year. But what is your theory on if you could have your wish, how would the system be funded on the employer side?
So I think there's real pressure, and you saw this in the UNC system a couple of years ago.
Yes.
Right, for our employing entities to try to figure a way out of the defined benefit plan, particularly if they're paying for it.
Yeah.
And so we got to respect that. I think there's another piece to this whole puzzle, which is a longer term conversation. We have a 5-year vesting period. And the truth is the defined benefit plan is really valuable if you've been in state employment for 15 years or more, and not so much if less. Is there a way to create an option for people that they would like more around, we already have a 401k. We could do a 401k match for them. There's lots of ideas around how you meet our employees where they are to give them the best value. It's not about saving money. It's about giving them what they want.
Right.
And we got a lot of people who thankfully served the state for a long time. And so we wouldn't change anything for them. And we certainly wouldn't take that option away going forward at all. But can you create another option that is interesting to people? I think that's a conversation worth having, but it's a very long conversation. We want to make sure that everyone's voice is heard in.
Yeah.
So you mentioned AI a little bit. So that was kind of the reason for your visit to Squawk Box, right? To CNBC. We have $40 million in OpenAI and $250 million committed to Anthropic, from what I understand, right?
Yes.
So you're not worried at all that AI is just a fad and a bubble, right?
So I started my investment career in the 90s.
Yeah.
And there's so many parallels to the internet in this conversation. Could it be a fad or a bubble? Could it be a life-changing event that destroys every single job? Or maybe it's somewhere in between. Usually it's somewhere in between. I think the old saying goes that innovation is overestimated in the short run and underestimated in the long run. Mm-hmm. And so it is with the internet. If you think about how all of our lives have changed by the devices we carry and the access to information, I think that's what we'll see with artificial intelligence too. It's not all bad. There's some dystopian elements of it. That is true. Mm-hmm. But in the short run, we're all struggling with, like, what is it? How do we use it? Why do we use it? That's true for every employer I know. That's certainly true in our agency. And in the long run, it's going to help us all do things we never imagined. And that doesn't mean that jobs go away, but jobs do change as a result of that. We've got more work than we can do with the 503 employees that we have here. And so we would like to do more work. And that's the goal that artificial intelligence, I think, helps us achieve.
And it's odd to say this, but, $300 million in a $148 billion pension is not going to break if something happens.
No, but I think, so the Anthropic stake at $250 million invested is now worth over $600 million.
Okay.
And I think that will make us over $1 billion by the time we're done.
Okay.
So that's why we've done it.
Yeah.
Investing in kind of that end of the risk return spectrum, the high risk, high return spectrum, is something we should have a small amount of. And to your point, $250 million is not a small amount of money, but when you compare it to all the money that we have saved up across all the retirees and all the active employees, it's a small percentage. We should have exposure to things that can change everything, because to some degree they act as a hedge against other things we own. But also, these are pretty iconic companies that could have massive valuations.
I haven't heard the pushback from folks about AI that I did about crypto. Crypto broke our Facebook page. That
well, I think that people see the results of AI more than. But I guess along those same lines, though, you did have a pilot program here with your staff, and it seemed to go well for AI use, and now you've expanded to the rest of your staff.
We have. So that pilot ended last August, and we implemented full access in April. And so you might ask, well, what took so long? A couple things. One, we needed to get through procurement, and DIT told us that it was going to take 19 months. So we got a helpful exemption from that process. We did that ourselves. But two, we needed to make sure that we were protecting private information.
Yeah.
And we run the health plan around here and other things. There are serious federal laws in play. So not interested at all in violating HIPAA
Right.
in general, but none of our people in specific either are. So we wanted to set up, first of all, an agreement that did not allow the models to train on any data that we input. That's a custom agreement. That's not the one you'd have as an average user of these models. So that took some time. And then second, we need to train our people, not just on how to use it, but how to be sure that you are protecting our people's data. So everyone here has gone through a pretty rigorous training program. None of it is surprising. You know that you're not supposed to do this. You're not supposed to send it out by email either. And so we have to remind people a lot of these things. So we went live in April. We have seen, and it's been voluntary, right? So we have 150 people or so out of the 500 and change that are using it. What we see is there's more adoption every week. What ends up happening is you use it. I notice that you're much more efficient and maybe you're able to take longer lunches and, I like that.
Yeah,
idea.
exactly.
And that's been a great way to do it because we process a lot of data around here.
Yeah.
And it turns out computers
It's
are better at
enormous.
that than people generally.
Mm-hmm.
Well, and yeah, I mean, we just in what we process, we've definitely discovered the more we can automate things and, use technology, unfortunately or fortunately, that's where it's at. And it's very expensive to do it and then to train people to use it properly because it's not enough to buy the technology. You have to get everybody ready. But I could not leave retirement as a topic without bringing up my favorite topic about retirement, transparency of the investment fees.
Yeah.
Where are you, having settled into this job, for what? 18 months now? Are you still in the same place on, where are you on transparency?
Yeah. So we have transparency of holdings that's new. So if you go to our website, you'll see that we now publish a monthly report of every single line item we own. We didn't do that before. That's about 120 pages. So there's a lot of things we own in $148 billion, as you might expect. So that's the first piece of transparency. As it relates to fees, I'm in the same place where we were. It is always, we're always trying to minimize fees, right? Where we get the most value for those fees. Where we have to keep them out of the public domain because we're getting something for it, we have to make a value-based judgment as to whether that's worth it. And I know that people have to trust us to make that value-based judgment.
Yeah.
But to get access to certain investments, to get access to certain managers, they insist that we don't disclose those publicly. And so we've got to decide whether it's worth it or not. And in some cases, we decide that is worth it. And I understand that can be frustrating for people. But I ask you to look at the bottom line result as the ultimate arbiter of whether you should trust us to do that.
Yeah. I mean, I understand what you're saying, but what if your result could be that much better?
Sure.
Your performance is good performance.
I understand.
But what if net of fees, it had yielded even more money for benefits for retirees?
No, I understand. That's always part of our calculus, right? Our people are incentivized to get the maximum net return.
Yeah.
And so they think about that all the time. 20% of our investment committee discussion every week is about terms and how we get them better and how we use our scale to make sure we can drive better terms with our investment managers.
Yeah.
So it is absolutely on our mind, but it's not the only thing on our mind, right?
Yeah.
We've got to get our retirees and our active employees invested in great assets. And sometimes you have to pay fees to do that.
Yeah. Well, I don't think paying fees is the issue.
Right.
It's just knowing what they are.
Yeah. And so you can see that in aggregate, right? We report that in aggregate, our total fee structure. Where it becomes problematic is when we have a manager who's high quality who says, you can do business with me as long as you don't put that up on your website.
Really, though, as big as you are, seriously, people are going to tell you we're not going to invest for you.
100% true. So it's not in every asset class.
Right.
If the real precious capacity in this business exists within venture capital. These are the people who start the SpaceXs, who start the Anthropics of the world. And I don't know if people will have read, there was a Wall Street Journal article earlier this week about the UNC endowment, where they put some money into SpaceX, and over 10% of their fund is now there because they made 1,000 times their money on it. The manager who put that position on for them was one I've worked with previously. I will tell you definitively, Founders Fund would not take your money if you disclose that.
Well, you just disclosed it.
Not their fees.
I'm just kidding.
It's never going to be a perfectly satisfying answer. I know that.
Yeah.
But
Well, it's not. And I'll tell you the main reason. Obviously, we want transparency around the health plan fees as well.
yes,
And I think it's very important for the taxpayers as well as the state
Yes.
health plan members. But what really gets me about the retirement system is that the 6% does come out of their check every month. And if
Sure.
they went and bought a financial instrument,
Yeah.
they would get all of that information, right?
nope.
What do you mean, no?
You know, as you get into alternative investments
Oh,
and in the retail channel, you
But-
don't get disclosed all those
but
fees
the-
either.
Public funds have not really, they have short-term great results with these alternatives, but long-term, the story of alternatives hasn't really been
It depends
kittens
on
and
the
rainbows.
alternatives you mean. I think you are probably right about hedge funds. Hedge funds have under-delivered on their promise for a long, long time. That is definitely true. Private equity, not so much. In the short run, public equities have had a fantastic run here. And so trying to compare anything to that is tough. But over any double-digit number a year period, you'll see private equity outperform public equity materially.
Well, I'm sitting here debating a guy that can go on Squawk Box because of his experience and success in investing. So probably let's move on to the health plan because
Sure.
I think this guy's going to win the investment debate.
Yeah.
I'm putting my money on it.
Quickly about the Squawk Box interview, I just wanted to mention this, that the first question the interviewer asked you was, why does the state treasurer care about investments? And it
That's
was like
funny.
so weird. And I was like, are you serious?
Well, I think in most states, the state treasurer is a highly political job that doesn't really get involved in the investments. And, you know, we've organized it a little bit differently here where it is not the only, but a very important piece of this role. Certainly as sole fiduciary previously, that was particularly true. And we were, one of three remaining of those. And so you'd see that focus in New York or Connecticut, where the other sole fiduciaries. As it's changed in role in other states, it has become more political. I suppose everything has.
Yeah.
And I think that's why they were surprised.
Yeah. So, moving to the state health plan, the other big part of your job that affects so many of our members. Last week, the board voted to increase the cost in the Medicare Advantage plans with Humana. Not the premiums, but some of the other costs.
Yeah.
Can you explain a little bit about that decision and how that helps the plan?
Yeah. It's a very important point you've made, though, and I want to reiterate it. Not premiums.
Yes.
This is a premium-free plan. That is the promise we have made to retirees. That promise is not changing. What we did change was the out-of-pocket maximums, among some other copay changes as well. As everybody knows, healthcare costs continue to rise dramatically. As I think everybody knows, the state health plan has got some serious financial challenges that we've been fighting for 18 months, and I know the prior treasurers were fighting too. So we have seen a material increase in what Humana charges us for all of our Medicare Advantage retirees. The plan has been absorbing those costs for, I think, 6 years now as they've increased each year. And we're to the point where we need to ask for people to help us a little bit. And I know that it's hard. And I know that people are on fixed incomes. And I know we haven't had a cost of living on the pension side. And so it's not something we did without thinking about it, without considering the impact of it. But as we think about the spirit of we're all in this together and we're asking everybody for money, literally everyone, it felt like we needed to ask the retirees as well. We have heard people's displeasure with that. I respect it. I understand it. I wish we didn't have a 15% year-over-year growth in our medical costs, but we do, and we're trying to get a hold of those better through a number of the initiatives we're bringing to the active side, both last year with Lantern and going forward, preferred providers. But we need everyone to help us make sure this plan stays around for everybody.
Well, I think we're thrilled at the market pressure you're trying to naturally create to drive those costs down to something more reasonable in some cases. I mean, some folks are probably still being kind of woefully underpaid using Medicare as a reference point for reimbursement. But come on, most of them are doing pretty well. Do you think it would sell better to retirees or anyone else whose costs go up if they could see that the way they could know that you're asking more from the providers, from hospitals is what we're talking about. It's not doctors that that are driving these costs up nationwide. I don't know if it is here in the health plan, but nationwide, it's hospitals more than it is doctors. So if you could show we were paying this percent to this hospital or hospital group, and now we've made a tougher deal, a more reasonable deal, I think that could help sell it to folks. But I think they're having a hard time accepting, look, we're asking everybody for something.
Right.
Because especially when they see, they read the paper.
Sure.
They know that a lot of these hospitals are doing very, very well.
Yes.
So what do you say to them because you can't tell them by law, you cannot share what you're paying these hospitals?
Right. So what I'd say is that we are a work in process and we need your help getting to the other side. We are early stages of creating competition, and that will allow us to create cost pressure, to create people's clear desire to work with our state employees, to lower their costs over time. You will see that in the plan's results. And whether we can get to the state where we can share every single contractual provision or not of what we pay in the future, perhaps. It actually might help set up a more clear competition for folks because they really don't know even what their competitors are charging in many cases too. We can't do that alone though. We need a broader transparency effort as a state, as a country. There were some early steps in that in 2020. The truth is they didn't put high enough fines into the noncompliance of those.
Oh, yeah. They're willing to pay.
Sure. Right. It's a cost of doing business. And I hope that the Trump administration revisits that because that would be the clearest way to do it. We always struggle with solving the healthcare system's problems and solving the state health plan's problems because we want to do the former, right? We want to get the system to a place where it works for everybody. But it's a monumental task that we're but a small player in. And so we have to keep coming back to what's actually good for the state health plan. We got to focus on that because we got a real effort there too.
And it's like you said, there's things that, obviously you can't control. North Carolina's the most expensive state in the nation for healthcare costs. And, you can't really change that with just the state health.
But the treasurer has a bully pulpit. And so I know the trade secret exception in North Carolina is kind of a running joke among attorneys as so broad compared to a lot of other places in the country that you can call anything a trade secret. And that kind of flies in the face of the general theory of transparency we're seeing out of our state government, and certainly anywhere public employees are concerned. Their salaries have to go on the internet and in papers, and everything about them is considered fair game to know. And yet people who make great profit off of them can say, hey, it's a trade secret, so hands off. Have you ever considered saying, I think we should have transparency. I think that the law should be made explicit.
I think it needs to be system level. So CMS started this with Medicare, Medicaid, and it's imperfect. So that to me is the best answer. That's more than half of all healthcare in this country is paid for this way. So if you start there, the second would be at the state level an all claims payer database, right, where everything is public. That would need to come from the General Assembly. Doing it just at the state health plan, even if we could, is an incomplete solution. And it ends up with, I think, some distortions that you probably ultimately don't want in the long run. What I think we want to do is have this be mandated for everybody. And then the system can organize itself around that. So to my mind, it begins at the federal level, and then it would be at the General Assembly.
Okay. Well, I don't have any other questions. Do you have anything else you want to talk about, artists?
What would you want state employees and retirees to know the most, other than what we've talked about, which is a lot? I know this office does a lot, and there might be things we're not even thinking about asking you that you think are pertinent to the lives of state employees and retirees.
There's a lot we do here, and it all intersects with the money of the state. And it's not just the two big ones. We have 5+ other ones. We're focused on affordability in a lot of ways. There's a lot of money that exists at the federal level to help with affordability challenges. One that we've been working on recently, and we don't have a division for this. We don't have a mandate to do this. I just think it's really compelling for the people in North Carolina is around power. The federal government is really interested in developing more power because power bills have gotten out of control, because power demand is extremely high and growing. And as a state, we need to raise our hand and say, yes, please.
Mm-hmm.
We'll take a couple $2 billion to help offset our people's power costs. And there's no one really doing that in the state right now. And so we've leaned into that to try to help our Utilities Commission and others get as much as we can so that we can lower power bills. So those are the things that you won't see that go on around here. We got a lot of people doing things that always come back to being better with your money.
Yeah, I think that's one of the things we've wanted to do with this podcast is let people, who run these important agencies tell us what their employees are doing, because taxpayers really don't have any reason to know what state employees are doing to make their life better.
Right.
And so I definitely want to give you a chance to.
That was actually my question of the week was, you are an employer, you are a boss of state employees here. Tell us one thing that your employees are doing that people may not know about that it's pretty awesome.
Well, I mean, we're here in June, so I got to talk about America 250.
Okay.
Right?
Oh, yeah.
This is such a big deal. And we have all our different divisions leaning into it in different ways. And of course, we're overly maybe focused on the financial history of America, but it's nonetheless so fascinating. And I think it brings us all back to the simple fact that we were so blessed to be Americans. It has always been an imperfect country. I think we know that, but it also happens to be the best country in the world. It doesn't mean we can't make it better. But we're spending a lot of time on that throughout the department. And frankly, I think everyone in the state government is, and appropriately so. So that's, because it's June.
Wait, what are you doing about the financial history of, I'm curious now. You've got me hooked.
We were at the Charlotte Mint yesterday, actually. So the first gold rush in America here in North Carolina. Yep. In the early 1800s.
Who knew?
Who knew?
Whereabouts were they digging?
Right in Charlotte.
Reed's Gold Mine, right?
There you go.
Yeah. We went there
I was in
elementary
Texas
school
at that time.
Yeah, okay.
So they found a 12-pound gold nugget just in the middle of a field.
Holy cow.
And they used it as a doorstop for like 10
Man,
years. I was
good.
into it.
You imagine? But then after they finished using it as a doorstop, they sold it to a jeweler for $3.50.
Wow.
12 pounds of gold.
Oh, my God.
It was a different time in 18.
Yes.
That was probably like $3 million.
Oh, more. I'm sure. It's $4,000 an ounce.
Wow.
Right?
Yeah. So we'll have to take a field trip there.
Apparently.
But go to Halifax. If you haven't been to see the resolves, it's really cool. And this is really one of the seminal documents in American independence. And, we understand it kind of because it's on the flag, but seeing it in person is really cool. And it's not far from Raleigh.
So we can expect more videos and maybe
Definitely.
some videos around the financial history.
Definitely.
Interesting.
That's really cool. Yeah.
The one other plug I want to give about July 4th is actually about Trump accounts. So for folks who have underage 18 kids or grandkids, there's free money on offer through the Trump accounts. And the idea is to get people started early investing in the American economy, and they are allowed to add to it. It's like an IRA, but you start at zero.
Yeah.
The government puts money in for you, and it grows long term. Those open July 4th. You go apply on the trumpaccounts.gov, I think it is. And so claim that for your kids, for your grandkids, because why not? It's free money, and God bless America, right?
Yeah. Well,
why not?
Thank you for having us today. And I'm sure everyone will love the interview, and hope you'll come back on again soon.
I hope to see your new palatial headquarters.
That's right.
Me too.
No gold doorstops.
Well, thank you very much.
My pleasure. Thanks, guys.
Mm-hmm.